This segment of Delmarva Life is sponsored by Key Financial Services.
Learning how to tie a tie, cook a healthy meal, even change a tire. All of those are important life skills that we all should learn, but there's an important one that's missing: how to manage finances.
Oh yeah, it might sound overwhelming, but that doesn't have to be the case. Thanks to the help from our friends at Key Financial Services. And here to tell us more are Colin Maycomber. He is the investment advisor with the Key Financial Services, along with Curtis Maycomber. He is the president. Thank you both for being here this afternoon. Can I ask you a really kind of an obvious question, but maybe not so much? Why is it so important to be proactive when approaching your finances?
Well, being proactive over reactive is so important in a lot of things, finances especially. Market correction or recession is an obvious example of that. You don't want to be making your adjustments after that happens. That at that point it's almost too late. You want to ride that out, which unfortunately for a lot of people, especially coming into retirement or in retirement, riding it out might not be an option. That's why we always encourage our clients to be more proactive about things like that: risk, fees, taxes, because once you get there, a lot of times it's already too late.
Right, be ready for it, be ready for it. So you don't do a cookie cutter approach. You set this up uniquely for each of the customers. How do you do that?
Well, we get to know the client. We ask a lot more questions than we make statements. I mean, it's all about getting to know the client's, needs and wants, desires, what they want to do in retirement, and ask a lot of questions about that. Not just about the accounts and the statements, but exactly what they want to do and what they hope to accomplish once they get to retirement.
We're seeing a bit of a decrease in interest rates. How does that affect us?
So, interest rates are really a double-edged sword. For retirees, typically we think retirees, more safe investments, things like CDs, which are guaranteed interest rates. So as you see those start to come down, you're not going to be seeing quite the returns that you've been accustomed to the last couple of years. But on the flip side of that, for those of us purchasing housing, things like that, those lower interest rates help. Obviously we're going to be paying less in interest, brings housing prices, brings that affordability down for a lot of people. So it really depends what side of the fence you're on, but it definitely is going to have an impact no matter which side you are on.
All right, so we've got an election coming up. I'm sure that's no news to anybody, but how does that affect markets?
Go ahead, you can handle it.
Anytime there's an election, we expect market volatility, sometimes for the better, sometimes for the worse. Right now, for us, it's all about managing that volatility, putting ourselves in a position where we can capture some of those market gains when they're present. But more importantly, especially for our clients in retirement, managing that risk if there is that correction or big drop. Like we said, once you're in retirement or close to retirement, we can't afford to have those 15, 20, 30% decreases as we're pulling and taking our monthly income from those accounts.
Yeah, I think you mitigate a lot of that in the 5 years prior to retirement. You don't want to be as aggressive as you get close to retirement. You want to start backing off some of those aggressive investments so that the volatility of an election or any down cycle in the market, has an effect, because when you're turning these assets into income, a 15% reduction in base or asset is going to mean a 15% reduction in income. So it's very important to preserve those assets as you get closer to retirement.
Okay.
So let's back up a little bit. What are some first steps someone should take if they are looking to invest?
The obvious answer that we're going to give you is meet with a retirement planning specialist. If you are planning on retiring soon. There's a lot of investment advisors out there, ourselves included, but our main focus is on that retirement planning process. How are we going to get you an income? How are we going to mitigate risk? And what's the most tax efficient way that we can do that?
Yeah.
All right.
Well, so you didn't bring your crystal ball today, but I'm going to ask you anyway. Any predictions for the market?
I have an answer for this. I can guarantee you this: the market's going to go up and the market's going to go down. We just can't tell you when.
Okay, fair enough. I think you're pretty accurate.
Didn't need the crystal ball for that.
No, he didn't.
Well done, sir.
Colin and Curtis with Key Financial Services, thank you for coming in.
Thanks for having us.